Hey guys, it's Astro back with a market update. So lots happened obviously this week. Put in all-time high last week. Very quick move up on these 2 days here to the 12th and last Wednesday. And then we, right at the close, I think it was, we wicked up, looked strong up into, 124, cleared 124, straight rejection. And been selling off ever since. Basically, we had 6 days down, or today marks day 7 days. So 6 days. Today 6 days. So 5 days selling off. Today we had an SFP. So had a nice move off that SFP on the daily. So we look at this here, right here. I think it was this morning at New York Open. We wicked down and then we've had a strong move up. Okay. Personally, don't think that any reason to worry right now. This is pretty typical towards the highs in this last leg up, where you're going to get a lot of, flushes down, wiping out leverage. And overall, this move down is probably nothing for what we're in for. Almost 10%, I think, before we even get to the all-time high or whatever that's going to be. I think we're likely to see a 20% drop at some point, probably a little bit higher. Maybe 135, 145. And, people are calling for the top right now. You can be sure another 20% move down or a bigger move down is definitely going to have people scared, emotions, and then I think we have another push back up to clear out that high. That's what I'm leaning towards. Obviously, Elliott we have kind of got here is from bear market low up to the ETF high, Bank of Japan carry trade capitulation, and then we have the Trump pump here, which took us into January, sell off into liberation on April, and then we're in this final leg now. So this is definitely the final leg. You're going to hear a lot of people calling for, an extended cycle into, Q1 20 or 2026. Even some people calling for super cycle because the ETFs are involved and it's never going to come down. I don't think that that's realistic at all. But I do think the cycle could be different. I do think that the bear market that we go into might be a little different, more so than this cycle. This cycle's pretty consistent with other cycles so far, but I think, with what's going on in the economy, I think there is likely some bad news over the next 6 to 9 months that will send us down into a bear market, but I think it could be more of a short-lived bear market than previous cycles, because if we're at the top and it's a recession kind of drive down into this bear market phase, I think that the fact that recession is going to lead to QE probably sends us much higher, much quicker. So, by middle of 2026 or middle to late 2026, I think we'll have already had the low and we'll probably get quite a quick push out. So that low that we put in for the bear market, I don't think will be as low as people are expecting. And then we will probably go on another run up in 2027. So that's just my opinions there, looking at what's happening in the economy. So looking at the short term, our wave of 3 here, or at least this is my count, the wave of 3 is an important level that we don't want to see get broken. So that would be the all-time high from January, which is in around just under 110,000. So until that gets broken, I'm still pretty bullish here. And, when you consider how bearish people are right now after seeing this drop, when you consider this on even like a 3-day or a weekly chart, what we're actually doing here, this was the all-time high, 111, just under 112,000. And the fact that we have pushed on this candle above previous all-time high, consolidated above, is extremely bullish. And in all honesty, if I was just, the fact we're on a weekly here, it's easier to see. But if this was like a daily chart, I would be saying, okay, we pushed through the all-time high. We managed to consolidate. If this comes back down to retest this level, anything around that previous high is a long, okay? So now if it came down here, if you had a long that, you could have held it to the new all-time high. And, we have not broke below that level yet, so you could re-long it. And that would have been yesterday or today, even this morning, would have been a long. And you could have just played the range, right? Until the range eventually gets broke to the upside or the downside. But what we're really going to be looking for now, because we are in a range and it's going to be hard to trade, basically probably shouldn't be looking for too many trades above this level and shouldn't be looking to short until we are at the upper level. So you can already see, if you miss this push up, at this point we didn't actually have the range, but when we did form this high, you obviously could have longed the previous high and rid that up to the previous high. So that would have been a long, and then you could have shorted back down to range low. Now you could long up to range high. If you are someone that follows my style of trading, you know that I do like the fourth time breakout. So 2 taps now at this 123 level. I think this looks great on the high time frame. I think a third tap sometime in the next couple of weeks, where we might get, a small rejection here. Maybe this is into the FOMC, right? So first week of September would be something I would, if I was to make a prediction, that we kind of grind up into that reject due to uncertainty. You're definitely going to have a pullback, and then the week of the FOMC, if it's good news, probably sends us out of this range on a fourth time breakout. So that is why I'm reading Bitcoin right now. If we do break this range low, we will deal with it then, okay? And there's every possibility that we do. This could turn into accumulation, could just chop around here for another couple of weeks, and then we might get a bit of a manipulative move where you get an MD pattern, so accumulation, manipulation, and then we go into distribution. And yeah, like I said, I don't really want to see us break below this wave 3. So if we do manipulate, don't want it to be anything too crazy below. That is Bitcoin. That is my stance. Ethereum doesn't look bad at all. Let's just clear everything here. We're at a point here now. You can see the third time breakout here that I just talked about on what we might get on Bitcoin. Where is it? So 1, 2, there's 2, 3. So you got your 3 taps on resistance, breakout, and now the same can be said for up here. We have now had 1 tap, 2 taps, and just going by what I just said on Bitcoin, this could chop around inside of this range. So this range would be from basically, the just short of the previous all-time high. So this high we put in last week down to the previous, this was resistance. So now flipped to support. you know, if you take it off these kind of wicks instead of the body, you can see that we did do a perfect retest on that. So could chop around here and get something very similar to Bitcoin where, you know, a little bit up, a little bit down, shakes a lot of people out. You get that first test and then leading into, this is obviously on a weekly, it looks different on a daily, but leading into the FOMC, we reject, pull back, and then if it's a good FOMC, you would get your fourth time breakout here too. So little rejection here, pull back, and then take off late September is possible. But as long as we are holding above these highs, so these are the cycle highs, we look good. Push up above cycle high, consolidate above is basically a long all day from that level. So that's my view. And then you can always leave runners, okay? In terms of the Elliott wave count, you know, there's a full Elliott wave down here, the 5 count when you look on the daily. I can show you and map that out for you. So this was your high. First low, and there's your high. Okay, so big wave 3. The reason you place your 3 here is because within this wave 3, you get a better understanding of the third wave, because within the third wave, you want to kind of see a clear Elliott wave 2. So you got the 1, the 2, the 3, the 4, the 5. Okay, and it meets all the rules. The 4 didn't breach the 1. Everything looks good. So that's why I choose to have my 3 on the big Elliott wave here, not this wick here. So got that 3 drive, or the Elliott wave down. And now on the way up, basically this would be your 1, your 2, and possibly 3, 4 here. And heading into the final leg of that price action, if we take a look at some projections of where we might get to. So, you know, looking at, we have 1 just. Where did we make it to? So we cleared the 1618, which is a huge level to clear. So cleared that. And then taken off this. I want you put in the 0.5 here. So this is probably going to be a resistance level for us right here. And above that, resistance, and their resistance. So these 2 levels, this would be your 786, and this is your 1272, and then the 1618 is up here, which is huge, right? So just, these are the kind of areas. What you can also do is just take a regular fib, and in an Elliott wave, once you've got your 1, your 2, and your 3, you can fib the whole Elliott wave. Okay. And entry fib. The 127 level is here, and the 618 is here. So these are areas of interest to me. So that level and that level. Okay. So I'll leave those on my chart. So if I was targeting for TPs, that would definitely be this previous high. This was the fib extension of the 2 to the 3 to the 4. So that would be a TP level. That would be a TP level. And then if you want to leave runners, you're heading up to those numbers there. So Ethereum looks good. Huge candle today. Engulfing candle too, if it closes like this. And we only have an hour left till close. So that's Ethereum. And then the last coin I want to look at is Solana. So Solana has been lagging, which we're going to talk about. But when you zoom out, go to 3-day. Solana put a very strong move in at the beginning stages of the cycle. So it's, it's well into the bull run at this point. The low. This could be your Elliott wave, or there's a very good chance that this is your Elliott wave here. Okay. And I think that we may have topped for Solana for the cycle. There's a good chance that this is our A, B, and C. I do think that ETH is going to lead over Solana for the cycle, but there has been accumulation in here inside this box. This lost this support here, came down under, and then so it did its distribution up here, lost the distribution floor, fell into accumulation, and this is reaccumulation here for a move higher. So it is very likely that we do move up from here, and we're probably going to take the accumulation range, and we can probably target on the breakout that same level. So my target for the cycle for Solana is 260. If you're holding spot or anything, or you're in any longs and you're trying to run your longs, I think anything from 240 to 260, it will be a good take profit area for swings. But in the near term, Solana has broke out of the accumulation area, came down, did its retest of that area, which it just completed, and now I would say it is going to outperform Ethereum for the next 1, maybe 2 weeks. Let's take a look at the Sol ETH chart. So this is it. Talked about this before, but super clean Elliott wave, right? You got your first small wave, then your third wave, and that last push up when Trump launched the coin topped it out. And then you got that head and shoulders. Okay, so left shoulder, head, right, ABC pattern, so an ABC correction. So once we lost this trend line, which was created from the start of the third wave, that was the underside retest that I did a post on. I said Ethereum is now likely to outperform Solana, and you probably shouldn't be playing Sol here. But, we have basically only tested, this is the first time where we've tested it here at 2, but this is the second time we're ever testing this trend line, and we literally came almost to it to the tick. Okay, so I have basically just shot a ray from this point to this point, and it's made that contact. So I would say that there's a good chance Sol gets a bit of a run here. Possibly gives that head and shoulders neckline a bit of a test here. So I'm open to being more interested in Solana over the next couple of weeks. And then when Solana gets closer to this level, I think then you're going to see more downside and money head back in towards Ethereum. And that's when Ethereum might get its, breakout moment. We just run back to Ethereum there quickly. What I was thinking on an Ethereum and how this would tie into Solana. So, looking at the high time frame, so if ETH just chops around in this range from 4,800 to 4,000, if it chops in that range, I think you're likely going to see Solana break out. Okay, because Solana's high for this leg is 209. I think ETH might stay in its range. Solana might break out towards the 240, even higher, and then money comes back into ETH. So that is the ETH Sol chart. Now we're going to look at Bitcoin dominance. Okay, so if any of you remember my post when we were creating this wedge here, we'll just get rid of the wave count here. But this trend line here and this wedge, and the second it broke out, I said, this is it. This is, it's ETH's turn. And then I got pretty bullish on ETH through and posted about it, showed you kind of my Elliott wave count for ETH, and we'll go over that too. And so A, B, and now even more so, we've lost the channel. So this channel that I've created here, all I did was tick the 3 highs here. So we got this 1, 2, 3, and then you got a wick above 4, and then pulled it down to the low. Okay, and that gave us a perfect contact point here. Now we broke below. Okay, came up for an underside retest, and now we're heading back down. So what is possible for this chart is likely a head and shoulders. And I talked about this months ago when price was up here, still inside the wedge, that I think this is topped and we might get the head and shoulders. You might come up underside, retest this channel. Okay, that would make sense. And then I think, if you get this, I think that either is very close to the cycle being over, and Bitcoin dominance probably regains its dominance at that point if the neckline doesn't hold. And if it does, well then, things are going to go crazy. You need a couple of other things to line up too, but I wouldn't count on the neckline losing, or if it does, it might be a deviation down under. It's a big move for Bitcoin dominance to drop down to these levels. Like this head and shoulder target would be, down in this demand zone here, which, it could get to, but with MicroStrategy and BlackRock, if retail really came in, it might lose this neck and head down. But I'm not sure that enough retail will come in this cycle to allow that to happen. But kind of keeping this area on my watch list for now. So 57.2 for a possible bounce and 54.6 for a possible neckline bounce, where, at this point, if this was to play out, you will probably see altcoins, Solana, Ethereum continue to run pretty hard for the next month, 2 months. Then Bitcoin may start to attack a new high and have that big push that everybody's talking about. So this would be could be Bitcoin heading for, 150,000. If during this drop we get rate cuts that are bullish and retail do come in, that means new money is coming in. So the total chart would probably be at an all-time high, maybe 5 trillion or more at this point. So then if dominance climbs up, Bitcoin right here, I think was sitting at around 112. I think we could be at 150 at this right shoulder here if everything was to play out. So, and then there'd be more profit taken on Bitcoin, and then you probably get another bit of an altcoin rally with Bitcoin profits, where Bitcoin probably just consolidates. Okay. And then lastly, we'll look at the dollar dominance. So big picture, looking at the 3-day chart here, taking two trend lines here, taking a trend line off this relative low here and through this relative low, this first 2 points of contact. And we basically never made contact with that trend line until December and January, where we put in a double bottom. So this was basically when alts were at their all-time high. And then later on in January, basically Bitcoin and Solana were the only two, I think, to really put in a bit of a run in January. Most alts were struggling at this point. But a double bottom, 2 contact points. Okay. And as you know, I like my fourth time breakdown. So looking at this bottom trend line, we've had 1, 2, 3, 4 little deviation below. So you got to remember that this trend line has never in history been broken. So the fact that we came down to that trend line last week at a strong bounce is pretty common. Okay, like it's not going to be an easy trend line to break. It's never been broke. And you can see then taking another trend line from that second real low. So this, in an Elliott wave terms, this would be a 1, 2. Taking it from the 2, ran it through here, and you have 1 point of contact here, 1 point of contact here. Then we lost that one, and we lost it again. So that trend line's basically done at this point, but it did act as an underside retest. Okay, so when we broke it recently, came up underside retest, and that was where me personally, I got bullish. Most people thought we were going to keep going up, and then we've just rejected off this trend line. So that's just taken off this wick, rejection. So obviously, to be super bullish on everything going much higher, we do need this trend line to break. Below that, we've got a bit of support, but I think if we do lose this support at 3.8 to 3.6 level, I think then we might have quite a quick move down where things go really on a bit of a parabolic run. And then, this order block, these 2 order blocks are definitely going to be support. But what you also have is a channel. Okay, so you got your 2 points of contact at the top, you got your 2 points of contact at the bottom. So now we do have an official channel. And if first I was to clear that trend line and that trend line for a second, just looking at this as a channel, I would fully expect that we can definitely make contact with that channel sometime, like this, making contact with it here. If we were to continue down, that would be somewhere around late October, start of November, which lines up pretty well. And then we're probably going to head for the top of that channel, and we may get a bit of a move, a little bit of rejection, and then a breakout. Will be a fourth time breakout. That will be your final tap right there. Right, and then you're getting, that's the bear market. And this bounce here would be your basically all-time high on everything would be in at this point. Then you get a sharp decline, and then you get that recovery bounce, and then that breakout sends you into the bear market low. So that's kind of what I'm looking at on the dominance side. Going into the lower time frame, last night we took a couple of longs. Okay, if you've been following me in Kaizen or Zenith, you will know that we kind of put out a plan for Ethereum last week, and then we planned the downside. Ethereum at this top, at this channel, we were following the Elliott wave. Okay, let's draw it out here briefly. Okay, so you know you got a 1, 2, 3, 4, 5, and then inside of this 5 right here, you've got your 1, your 2, your 3, and then somewhere around here, your 4, and then your 5. And whenever it comes to Elliott waves, there's only one occasion inside the Elliott wave where this 5th wave can overlap. If you don't know Elliott wave, you won't understand what I'm saying, but basically have this channel, which is bearish, okay, this rising channel, and inside of this, you basically have an ABC, okay, ABC, okay, and that's a flat ABC with almost a double bottom, okay, and then you go into 5th leg, micro Elliott wave, right, which was the high, okay, and then inside that one you've got a choppy 5, so kind of hard to read, but we read it, and basically was this underside retest idea that we would then come down and we would have to basically reaccumulate. So there's a very good chance now we do pull back, but I think the low could be in, and then we start to chop up, right? And then we start eventually taking off. So that's the thought on Ethereum. That was the plan all along in terms of the macro Elliott wave. Oh, I shared this with everybody, but you know, let's put this on a bar chart. So our idea was that we were going to, at the time, we already had this 1, 2, and then we were going to come up, we were going to put in this 3, this 4, and that was going to be a cup and a handle, and then we would send us up to wherever this 5 is going, okay? And I drew out this cup, right, well in advance for you all. Where is my cup? And the idea here was we're going to find resistance at the cycle high. So the double top previously, cycle high, or triple top almost. We're going to find some form of resistance. We're going to reject, and that rejection is probably going to be a little bit more shallow because it's going to be create a handle. And it did. And then the next thing we're going to run into is going to be the cycle high resistance at around the 4,900, 4,800. And when we get up to that level, we are likely to see a rejection, pull back, and we pulled back literally to test the cup or the neckline here, because this is also not the best, but bit of a left shoulder, head, right shoulder breakout. So now, if you look, technical target for just Ethereum based off the cup is sending us up to that area where we looked at. Okay, that's a double confluence for me for taking profit. It's a little bit short of my area. But I think that was the 1618. I'm taking the 3 waves. Let's fib that again one more time. Taking it off there. This is the 618. And the 2, maybe? It's the 2618. So it was this was the area. So I would probably be looking to, for the safe thing, taking most of any profits that I'm looking at in Ethereum out here. And my runner would be looking at this cup and handle target. But at that time, I probably only have 10-15% of any position left to run. So everything's going to plan. I know this week has been emotional in terms of, and that's the idea, right? These flushes. And it's not the first one, right? This was quite an aggressive flush. This was an aggressive flush. And every time it's going to make, and as we get later into the cycle, every time the flushes are going to make everybody question, is the top in? And one of the times it will be. The flush will be the top. So no one can ever say with certainty that it's not the top. But looking at measured moves, you know, for some reason this recent drop felt a lot worse. But from the first rejection at the cup, was 15% drop, and from the recent correction it was 15%, so two equal drops, but this one felt a lot worse. So you can imagine, you know, if there's going to be another push towards 5,398 and we get another 15% drop, it's going to take us down to 4,500, which is going to be have everybody calling for the top again. Then you might get one last push later on in the cycle, and you know, cycle's probably going to end with quite an aggressive candle down, to be honest. But that's pretty much it. Don't think there's, the last thing I want to cover is others. This is going to be your altcoins, okay? So including the top 10. So taking out Bitcoin, taking out Solana, Ethereum, your stable coins. This chart is interesting, okay? If you're holding altcoins, I think this chart looks super bullish. Bit of a head and shoulders here. If I put on candles, it's quite a nice head and shoulders. So major resistance here, this red line. We'll call that the head, you know, here. You can either call this the head or the right shoulder. Let's pull that down. Something like that. You know, it doesn't have to be spot on. Like, let's just leave it here for now. Leave it here. We'll just move it over to that low, Okay. And the trend lines I've picked for this are basically, I'm using all-time high for the dominance from last cycle, and then this high. And where we're actually at right now is under, right now the bear market was over here, 2020. So this was basically January 2022. So yeah, that was last cycle. 2023, that was the bear market low. So we're trading under the bear market low right now for dominance, which makes sense. Bitcoin has been killing it. Now, I'm just going to get rid of this for 2 seconds. If this is to run, you then have a bigger head and shoulders, okay, where, let's redraw it. Here, 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 head, and then, you know, something like that. And you've got these trend lines. So you got this trend line I ran from this high through, and the blue arrows represent how many contact points we've had. So we had the one up here, then we had 2, 3, and it broke out. So this trend line here. Make it yellow. So that one's broke out. It's deviated under, but now it's done an underside retest. And then this more recent one is yellow, 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 yellow. Okay, lots of contact. You can see that this one is itching to break out. So tested here, tested here, tested here, coming up, almost testing again. Okay, and alongside the diagonal, you've got a horizontal, right? Clear, support, got a big bounce, support and held, deviated under, held, lost it, retested, and then broke back below, broke above, broke back below, and this trend line's been holding us down. So this would be, this red line along with this trend line is looking very close to a breakout retest. Okay, so then when we reclaim this red line, we can look up towards this red line. Even this red line has also, been tested once, twice, 3 times. This could just absolutely send, in my opinion, straight through, because it's already tested 3 times. So you could just get a 4th time breakout, retest, head up into that huge diagonal, right? Which would just be the 3rd test. And then I think that's when you find out what's going to happen for alts. But that still leaves us a lot of moves. So this move looks like it's pretty close now. To be honest, it looks like Bitcoin dominance has lost this channel. Looks like it's on its way down. It's looking like it's going to drop another 7%, which is quite a bit. That's 7% of all the money in crypto leaving Bitcoin and heading elsewhere. So 7% of such a large market cap can move some of these low caps. That's a 15% move. So that kind of makes sense. Taking Ethereum out of the question, Ethereum might be a little bit slower over the coming weeks. So yeah, I still like how things are looking. Some of those alts that I like are not your popular ones. I'm not really looking at anything like Link anymore. I liked Link when it was in accumulation down here. That's when you should be buying. The next best opportunity to buy if you miss accumulation is the breakout retest, and it gave a nice retest right here of that accumulation. So, it's taken off, and now, we're almost at the cycle high. Could this go up to 44? For sure. That's going to leave you still a lot of gains, right? 44 is, I think, the target for me on this. Still 68% away. ENA accumulation was where I was interested in it, and about 70 cents is kind of where I got out, and I'm kind of done. Could it get back up to here? For sure. But I am still interested in looking for strong coins inside accumulation. So the big ones I like Avalanche. It's got a nice structure to it. It's still in accumulation. The breakout, I think we can target that $50 mark. Near, good coin, similar pattern. A little bit more suppressed than Avalanche. I think breakout, you're able to target the $6 mark. Currently trading under $3. Injective, same situation. Red line is your accumulation. Anything under is for buying. Anything above is for selling. So, very, very close here. If you zoom in, it deviated. So it's already deviated above, came down, put in a higher low. And yeah, it's probably in the next week going to break the accumulation and you can just see what happens when things break accumulation. So here's ENA. Spent a long time in accumulation, 166 days. Then it breaks out, retests. This marks your retest. And then, it does a lot of its moving over the next 16 days. It's up, 100% basically. From the retest to the high, 102% it gave you. And that was in 18 days. Link. Here's the retest. And you got 74% in 18 days. So yeah, I'm interested in getting in some things early before the breakout. And then you can DCA in on the retest. And that makes it a lot easier to do the DCA because if you've got an entry down here on Avalanche, for example, at $22, and it's a decent sized position, then getting in here is a lot less risky. Maybe what you do is you ride the pump out of accumulation, but be prepared for the pullback back to accumulation. So this would be a good profit taking area. You might want to drop half your Avalanche and then add it back in right here. So yeah, Avalanche near Injective is a good one. And I like Pole. Where is it? Looks good. Nice accumulation, just like Avalanche. This gray bar marks your breakout. Yesterday deviated above, coming back up. So I like Pole. I like Cass. I like some of the old coins. I like Dot. I like these 3 points of contact. I think this thing's going to send. And a lot of people are chasing the coins that are moving at the time, and that's fair, because if you want to long something and make money right now, you want to obviously go with a coin that just broke out, and then you get in on the breakout and you ride that 1 to 2 day pump. I get that, but oftentimes you've missed quite a big move, right? So if you can be accumulating, ZK is a good example, but it's obviously dropping here, puts in the low. If you can accumulate anything under the 50%, so inside this red box, if you can be buying here, even from say here to the accumulation is 70%. And after we break out, this is when everybody's interested. Now, if you're up 70% on spot before we've even broke out of accumulation, and then you're going to get 2 or 3 day pump, you could be up literally 160% at 2 days after. Now, what the thing about it is, you'll have to hold. So say you're buying here, you've got to hold. You've been holding this for 42 days and, you're up, okay, you're up 40%, but the good times are coming. And if you're patient, we're probably going to hit that fair value gap at 172% up. So Aptos is another one. Very, very tight accumulation. This thing looks like it's ready to rip. In my opinion, you can see that it just does the same thing over and over again, right? Big sell off, bottoms out into this cup handle, breaks out of the handle. So the cup and handle formation is accumulation. That's what a proper cup and handle out of the bottom is. That's what an inverse head and shoulders out of the bottom is. You can see the inverse head and shoulders here. You got your left shoulder, head, right shoulder. This is accumulation. Down in the bottom half of accumulation is where you want to buy. So the bottom half of the cup. So if this is the cup, below the red line is where you want to buy. This is the cup. Below the red line is where you want to buy. So I think that Aptos, let's just delete all this for now. I think Aptos, this is probably going to be your top of your cup. This is your low. I think anything under the red line is a buy, and I think there's a lot of upside to this. We're almost at the lows. Yesterday we went very close. So just to the 50% of the cup is 61%. To the cup itself is 131%. And then if you break out, just like we did in all the other cups, then, it's very likely that you've got 1 point of contact here, 1 point of contact here. This cup could create 3 points of contact. Say this is the handle, which is the same, or this is the lid of the cup, which would be the same lid as the other two, and it would create your 3 points of contact. Then you get your handle, and this would be your fourth time breakout, right? So you'd have 1, 2, 3, rejection, then the breakout, and this white line right here takes you up to that cup and handle, inverse head and shoulders kind of target. That's $17, and that's 300%. Okay, so that's one I really like. Algo looks like it just broke out of accumulation. That's the accumulation pattern right there. Big double bottom, red lines, accumulation, comes up, dips back in, and probably going to full send, right? So one of the trades, ZK was one of our trades. We got in pretty early, and ZK S probably is in deep accumulation here, in my opinion. Might be one of the ones that runs a little bit later, but I think it will run. So anything inside of this box is a buy. Right now we're at the 50%. So just at the discount level right here. So anything below is a discount. And that's pretty much it. Hope that you enjoyed. I hope that helps you. Hope that settles some emotions. But I'll try and do more of these. And if you're in Zenith, I'll see you tomorrow for the education.